Hello and welcome to this special report here at XM.com. We'll be discussing tech stock earnings and the outlook for the streaming giant Netflix, as well as Microsoft and Tesla. Lately, there has been some optimism surrounding equity markets, with major U.S. indices recording gains since the start of the year. Can the ongoing earnings season validate this trend, or are we heading towards a reversal? I'm Maria Pachordiz, and joining me to discuss all this is junior investment analyst Stefanos Economidis. So Stefanos, last year was a pretty bad one for equities. As 2023 unfolds, what's the outlook for stock markets? And how have tech stocks performed lately?
Hello, Maria. You're right. 2022 was a devastating year for stocks, as the global monetary tightening, coupled with high and sticky inflation, inflicted severe damage on risky assets. The rising interest rates reduced the value of companies' future cash flows, while borrowing to fund investments became unattractive, and this combination led to a substantial sell-off in stocks. However, lately, we might say that these themes seem to be subsiding, as there are increasing bets that the Fed will slow down its monetary tightening pace, on some signs that inflation is indeed declining in the US. That has induced some upside pressures on stocks, with more market participants starting to share the view that the US economy could indeed perform a soft landing, or at least get away with a mild recession. So all this positivity has translated into gains for stocks in 2023.
Taking all this into consideration, what are the main themes to watch for in the upcoming earnings season? And what have the early releases revealed?
Well, this is expected to be one of the toughest earnings seasons for big tech, dominated by slowing sales and declining earnings, mainly due to the inflation-squeezed consumers having reduced their spending on discretionary items. Now, we have seen tech stocks have inflated valuations, but they fell back a little bit after last year's sell-off, with most of them still retaining a hefty premium relative to the S&P and the tech-heavy Nasdaq. But now, as leading economic indicators point towards a recession, which will probably deteriorate the already adverse macroeconomic conditions, this might force tech firms to tighten their belts and proceed with some cost cutting and staff layoffs in the upcoming months. Now, this could be reflected in Q4 earnings, but projections are already set very low. We could see some outperformance, but the base case scenario does not include a severe recession. So if that case happens, then there might be some further earnings downgrades that will lead to some losses for equities. Now, up until now, some banks have already reported their earnings, with JP Morgan and Goldman Sachs, which have already warned about a recession, as they increased both their loan provisions and their reserves to withstand an adverse economic scenario. So summing up, even if companies manage to clear the low bar, potential pessimistic future guidance could dent investor sentiment and put an end to the latest stock market rally.
Now, starting from this week, Netflix will report its fourth quarter financial figures on Thursday. Where should investors focus? And do you think that we can extract some useful early indications for the upcoming tech earnings?
Well, Netflix is just another example of a pandemic darling that struggles in the post-COVID-19 era. It's almost certain that it cannot sustain its performance without some material changes in its business plan, and this is communicated from its management. So, in response to the increasing headwinds, Netflix launched an ad-supporting tier, which will enable it to enter into the competitive market of digital advertising and compete with tech giants like Microsoft, Google, and Meta. Investors will assess how this move has played out from the net subscriber additions that will be reported in this quarter. Netflix has signaled that it will add 4.5 million subscribers compared to the 2.4 million added in the past quarter. So any negative surprises could lead to some losses for the stock price. Apart from that, its digital ad revenue metrics could act as a useful proxy for what to expect from the other tech giants reporting next week, whose revenue largely depends on that business segment.
Right, moving into next week, we have Microsoft unveiling its results on Tuesday, followed by Tesla on Wednesday. What's the outlook for those two tech giants?
Well, things do not look that great for Microsoft, which is expected to report its slowest top-line growth in over 5 years and the first drop in earnings in the last 8 years. Sales growth is slowing across the board, while growth for its cloud computing and software segments suffers a slowdown since mid-2021. Moreover, demand for its hardware products is also declining, as sales for gaming consoles and Windows are expected to fall for a second consecutive quarter. Looking forward, investors' interest lies on the anticipated layoffs that the management has already announced in an effort to reduce its operating costs, and any potential expansion in other business segments will be also eyed by investors. Now for Tesla, there are both idiosyncratic and macroeconomic risks to consider, which have already weighed on the stock price, and we have seen the price declining a lot in the last quarter. The electric vehicle manufacturer announced price cuts in both the US and Europe earlier in January, so this will act as an effort to try and regain some market share lost by other startups or legacy makers that have started producing electric cars. So investors will be looking how this move has affected the profit margins and Tesla's sales figures. Now another issue that has arisen is the fight between shareholders and Musk, with shareholders pressuring him to focus more on Tesla and try to snatch the stock's losses instead of spending all this time to manage Twitter, while there is also an impending trial concerning the impact of Musk's intention to take Tesla private back in 2018. So, except for the fundamentals, Tesla seems to have many things to resolve moving forward into 2023.
Stefanos, thanks so much. And thanks for joining us for this special report here at XM.com.